You'd think things would slow down by mid-December in the housing world, but this week, well, it was one for the books. We have fresh new inflation data. There was a Fed rate cut, along with their forward guidance as to what we can expect in the States in 2025. Another grim unemployment update, along with a devastating fall economic statement, an equally bad BC budget update, and just a little bit of a shakeup within our government, with both the finance minister and the housing minister jumping ship. Lots to cover today. Let's get started. Inflation. Let's touch on inflation first, where it hit 1.9% in November, lowering 0.1% from the month before. The inflation rate in Canada has now been at or below 2% for 4 straight months. The all-important shelter component of inflation, well, it continues to cool down as well, with mortgage interest costs at 13.2%, but that marks the 15th consecutive month of deceleration of that component of the basket. Conversely, though, rent went up 7.7% in November, year over year, of course, up from 7.3% the month before. This I find a bit confusing, as we know that rents have been dropping nationally year over year, especially in the major metros such as Vancouver and Toronto, where Vancouver rental rates are down an average of 10% from this time last year. The decrease, though, is forecasted to continue its downward trend as immigration levels will be significantly lower compared to recent years. Plus, there's like a record number of rental units completing over the next couple of years. You take those two elements combined and you can understand why rental rates will likely decrease moving forward. And you can expect this data to be reflected in the upcoming inflation prints, likely lowering that overall number even further. At minimum, it'll keep it stable, right? Below 2% for the foreseeable future, the future coming months. Rate cuts are currently expected at both the January and February Bank of Canada meetings next year. With the markets, they're currently expecting these next two cuts to be at 0.25%. Okay, not the 0.5% or the 50 bips we saw at the last two meetings. It is definitely believed that the rate of cuts is going to slow down here. When it all kind of settles, a overnight interest rate between 2% and 2.5% looks to be within reason by the middle to the end of next year. Now, the 5-year bond is still hovering around that 3%. It's been incredibly sticky, and the overnight rate is forecasted to keep dropping. So understandably, variable rate mortgages are becoming increasingly popular again and should be seriously considered when having that discussion with your lender.
Let's move on to our U.S. Fed rate cuts, because that happened yesterday. On Wednesday, the Fed down south cut another 0.25%, and it now sits at 4.5%, still 1.25% higher than Canada's rate. And Jerome Powell, pointed to very strong GDP, only a minor increase in unemployment. And the inflation trend is still trending in the right direction. As the reason noted, they didn't really need to cut more than 0.25% because it's a fairly robust economy down there. The Fed also shared that they predict 2 rate cuts in 2025 as opposed to the 4 they had previously mentioned. And it triggered an aggressive sell-off. Treasuries and the Dow dropped by over 1,100 points in yesterday's session alone. That wasn't the only thing that plunged. The Canadian dollar also dropped beneath the 70 cents mark, too, showing again the weakening economy in Canada. Now, Canada is targeted to drop to about 2 to 2.5% going into 2025. And that's the largest gap between the U.S. and Canada. About 250 points has been the largest we've ever seen. So we're getting very close to that now. And that took place back in 1997. It's been that long since we've seen this gap. And even with such a massive gap in interest rates, if we get in our time machine and look back here, the Canadian dollar was much stronger then than it is today. Today, we're at $1.43 to every $1 US. Back then, it was $1.29 to every $1 US. Even with the US in good economic standing, Trump will undoubtedly pressure the Fed to lower rates. He historically did that in his last presidency. So we'll really see how this continues to unfold in 2025 once he actually takes the reins.
So while the US is touting their strong economic future and a really good jobs rate, Canada is trending in exactly the opposite direction. The labor market received even more bad news this last week, where job vacancies fell sharply in Q3. And this wasn't due to jobs being filled, it was just the opposite. It's the fact that these companies are simply not hiring as much people as they used to. The unemployment rate hit that 7-year high earlier this month, and now job vacancies just hit a 4-year low. Remember when they peaked back in 2021 at 1 million vacancies in our country? And that's when they essentially opened up the floodgates with immigration, because Canadians just didn't want to work because of all the free money they were being given out. Well, that number has dropped from 1 million to just below 600,000. But as you could imagine, there's just a few more people in this country than in 2021, something like 3 to 4 million more people in the country since then. This sub 600,000 job vacancy number is one that has not been seen since 2020. Vacancies are down 7.8% quarter over quarter, but they're down 22% since this time last year. But here's where it gets worrisome though. Canada has less than 1 job available for every 2 people that are looking for that job. The vacancy rate is less than the unemployment rate. And unfortunately, this isn't one of those periods where a tight job market signals a booming economy. Instead, the current downturn, well, it coincides with a sharp rise in unemployment, now at its highest non-pandemic level, dating all the way back to 2017. Adding to this concern, nearly 1 in 5 unemployed individuals are classified as long-term unemployed. And that means they're facing limited opportunities to re-enter the workforce. Inflation is the Bank of Canada's main concern when it's high, and they will increase rates until it's back in line. But unemployment is the Bank of Canada's main concern when it's low, and they will decrease rates until that metric is back in line. So with the unemployment rate on track to continue to increase, interest rates are definitely on track to continue to decrease.
Yeah, just take your finger off the dials for a minute. Let the companies adjust. It's just crazy. It seems to be all this pandering to interest rates as opposed to whether or not you're actually productive or creating anything worthwhile in the economy. It's crazy. Housing starts, let's touch on those. Canadian housing starts rose 8% month over month. Yay. But starts were up 25% from the same month last year. And while these numbers sound promising, at least in real time, when you look at the long-term trend, that's where we need to pay attention. It's not looking great. Housing starts have been dropping since early 2023 and are forecasted to continue and get worse. Starts announced now are largely projects that were initiated some years ago, past the point of no return. In other words, they sold or pre-sold enough units to gain construction financing and are now in the building phase. The data to keep in mind here is the number of large-scale building permits that indicate future starts. Those are really concerning. Ontario, for example, saw permits drop 13% month over month just last month alone.
And the majority of these starts are likely within the rental component as well, meaning they're not going to bring new end user product to market, which is what a lot of people need now because we have a record number of rental units completing, right? That segment looks to be largely under control, right? They're hitting good targets there. But end user homes, that's where we're seeing this severe amount of future shortage. Now, let's talk about what happened in our government this last week. And while we are not a political channel, in Canada, politics and housing are so deeply intertwined. So, I think we'd be remiss if we didn't at least share a few comments on how these recent events will affect Canadians and their ability to afford housing. And I think let's quickly start off with a history lesson that perhaps in hindsight shed some perspective on what got us to this moment that we are experiencing right now. Chrystia Freeland was the first female finance minister of Canada ever, right? A fantastic achievement by all accounts. But when we look at her education, she completed her bachelor's at Harvard University. Also very impressive. Her bachelor's was in Russian history and literature. And then she moved on to obtain a master's in Slavonic studies. Okay, this is the academic field of area that studies Slavic people, their language, literature, history, and culture. And now her choice to study Slavic people makes more sense when you understand that her mother is from the Ukraine, okay, a Slavic country. Chrystia then went on to become a journalist in the Ukraine. She held, after that, editorial positions at the Globe and Mail, Financial Times, and Reuters, and then moved into government as an MP in 2013. During her campaign, she received criticism for purchasing a home back then worth $1.3 million. Apparently, at the time in Toronto, homes were averaging $480,000. Right? People, you're in a fishbowl in the government, right? You're a public figure, so you get scrutinized no matter what you do. But her big faux pas was buying a house. But let's be honest, it was 3 times the area average, right? So that'd be the equivalent of somebody today in Vancouver, an MP, going in and buying a home for about $3.3 million. I didn't know editorial positions paid so well, but hey, jokes aside. She then became the Minister of International Trade in 2015. She then became the Deputy Prime Minister following the 2019 election, where she also became the Minister of Intergovernmental Affairs. In 2020, she was appointed as Finance Minister, becoming the first woman to hold that post. As noted earlier, Chrystia had 0 financial education or experience, 0, before she became the Finance Minister of a country with a $1.9 trillion annual GDP. The decision to put her in the role came with some public backlash. Quote, "She's still only a journalist with 0 economic background," tweeted Diana Murphy, who identifies herself as the former official photographer for Prime Minister Chrétien and not a liberal. She goes on to say, "I'd go as far as declaring it irresponsible." Another tweet from a Mark W. described Freeland as grossly unqualified to be finance minister. Another poster who claimed to have 30 years of Bay Street experience came to a similar conclusion. Freeland is well in over her head. Sheila Walker from Calgary stated that Freeland had, quote, "absolutely 0 financial or economic bona fides," and then went on to mock Freeland's degrees in Russian history and Slavic studies from Harvard and Oxford universities as being basically irrelevant to the task at hand. Okay. Now let's look at it a different way, right? Sure, those are online trolls, if you will, whatever. People are always going to have their opinions. But in what world does somebody with 0 financial background become a chief financial officer, for example, right? Like imagine Chrystia walked into a Fortune 500 company and applied for the job as CFO or even an accountant at that level. I don't think she'd land either one. But here we are, where she becomes the finance minister of an entire country. And this is an element of the government that I've personally never understood. So maybe someone can enlighten me in the comments. But like, why does our government put people with no history or education into these roles that are so vital to the well-being of Canadians? And what's more, if they often fail at that job, well, they're just shuffled into another role where they have an equal amount of no training or education in. It feels very flawed to me, but let's move on. Regardless of what I think or what the internet posts think, let's have her work speak for itself, okay? Because since becoming Minister of Finance, Chrystia had run a deficit every single year, including the largest deficit ever recorded during the pandemic. Sure, bit of an outlier. Probably anybody in that position would have done the same, but let's move on. Running the country with a balanced budget, it's simply not a common thread. In the 11 of 12 years prior to her in that position, the country ran at a -% of GDP every year, right? Let's recognize too, though, from 99 to 2007, it did run as a positive as a percent of GDP. Now, let's also remember that Chrystia was instrumental in the decisions regarding the CURB or CERB payments program. And remember when Trudeau invoked the Emergencies Act when all the truckers were driving towards the Parliament buildings? Well, as Minister of Finance, Chrystia worked with RCMP and financial institutions, to block the financial services to those participants. She was the one blocking them from accessing their own money in banks. As Minister of Finance, Freeland promoted programs such as the First Home Savings Account and Home Buyers Plan intended to make housing more affordable. During her tenure, though, national home prices rose 34%. To put that cherry on top, Chrystia resigned from her position just hours before she was meant to release that fall economic statement, right? Where she would have announced that her target of running a mere $40 billion over budget would have surpassed that by over 50%, reaching $62 billion. She was also over 2 months late in delivering this economic statement. Now that the numbers are out, now that dust has settled, is there any accountability for this level of overruns? No, it's just a whoopsie moment. Let's just move on. She's gone. There's no reprimanding or anything like that. It's just the way our government operates. Okay, it's unfortunate. But let's tie this all into housing now, right? Because with the government essentially bleeding money, with the chaos we've just seen in the cabinet, with the majority of Canadians, including members of his own parliament, wanting the prime minister removed, from the outside, Canada kind of looks like a sinking ship that's just lost its rudder. The confidence then in foreign investment coming into this country, it's rapidly disappearing. Why would you invest in a country where your returns are far less than the neighboring country, for example? This will ultimately reduce the number of jobs available, and it'll further slow our economy. Immigration numbers are definitely looking to drop further, and that will reduce government income, meaning overruns might run even higher. Plus, we're going to see rental rates lower. Okay, great for that segment, but that'll also in turn likely reduce the amount of mom and pop investors or even institutional investors looking to provide housing for the rental community within our country, including developers. Yes, there's a bunch being built today. Watch how dramatically the rental buildings under construction shifts over the coming years. Also, with these changes, with our government, with the lack of foreign investment, it will likely reduce the overall national price of houses. Okay, but comes at a cost, right? It comes at the cost of construction jobs, which, that's 8% of the country's workforce. So all in all, it's a crazy shakeup, and we look to have a pretty tough 2025 ahead of us. There's a lot of work to do at the high level.
Can you again imagine if Chrystia Freeland, just as an example, walked into a major corporation's office and said that their budget overruns were going to be 50% higher than what she had initially thought 2 months after the fact? Do you think you'd still keep your job? Your job is to literally stop the freight train when it's moving in the wrong direction. That's your job as finance minister. Let's not forget that she's also running for re-election, so take that for what it's worth. Trudeau government spending, I just want to add a couple more points to what you made because I found it fascinating. Trudeau's government spending is also on track to produce the 5 highest years of per person debt adjusted for inflation in Canadian history. As of 2024, Ottawa's debt equals $51,467 per person in Canada right now. Thank you for that awesome job as finance minister. No good at running the country's money, but, in some way, shape, or form, these people in power seem to do a great job of lining their own pockets. And let's not forget that Trudeau just put his best buddy old pal Dominic LeBlanc as the new finance minister, someone who has also never run a business or held a financial position anywhere. He's a lawyer. Trudeau is once again showing his incompetency in picking the worst person available for the job. Let's be honest, Mark Carney would have been the right choice, but Mark Carney would have never joined the Liberals' sinking ship. The Liberals have destroyed their brand. In fact, I reckon he's got a higher degree or a higher chance of running for the Conservatives as the finance minister than he would as the Liberals. So the one thing our government appears to continually do very, very well is nepotism. And of course, not listening to anyone but their own indignant and self-righteous approach to what they feel is best for Canadians, instead of actually listening to what Canadians need. So, anyhow, let's touch on the next member to quit Canadians after a masterful display of incompetency, Mr. Sean Fraser. This past week in government, like Dan said, continues to be one for the books. So not only did Chrystia Freeland quit, but Sean Fraser quit. People quitting at the time when their country probably needs them the most. Also, Sean Fraser thankfully announced that he won't be seeking re-election, and rightfully so. Let's do a quick recap on him as well. He led the country to experience the highest level of immigration on record ever, which resulted in the record high rental rates, massive wait times at hospitals, not enough room for children at schools. Let's not also, forget about the overburden and stress it put on all of our infrastructure, the exploitation of students at private colleges, and this is now a decision that has been highly criticized by his own party. Sean Speer, a senior policy analyst, offered a scathing critique. And listen here, I'll say it verbatim. The damage that his policy choices have done to Canada's immigration policy cannot be overstated. His tenure in the portfolio will go down as one of the most damaging ministerial records in modern history. No wonder he wants to spend more time at home. I don't blame him. Even Pierre Poilievre called Sean Fraser the most incompetent immigration minister in Canadian history. After the population increased by 430,000 people in just 3 months, the government was criticized for having lost control on July 26, 2023. As such, instead of holding somebody accountable and maybe firing them from their position and putting somebody more responsible in place, he was appointed the Minister of Housing. I don't know if this is another whoops moment or just more nepotism. There's, again, no accountability. Let's just change your job, give you a new title, and the Canadian people will forget. Well, we're here to make sure that you don't. During his less than 2 years as housing minister, Canada suffered the highest amount of real estate business insolvencies on record. Housing starts and building permit applications have reduced dramatically, much like we just talked about. And he didn't deliver the pre-approved home design catalog that was promised. Remember, that was going to be the post-war fix to all of our housing issues that never happened, just like Trudeau's housing promises that never happened. 4 million homes never happened. Let's be honest. He entered this position at a very difficult time in Canadian housing, and that's why he should have never taken it without any experience. But results speak for themselves. And perhaps he now gets to add the most incompetent housing minister in Canadian history to his resume.
It all feels quite bleak, and hopefully this shakeup and the sort of public outcries that are becoming quite loud now will see a shift in our government and the people and their qualifications therein, because it's clearly trending in a direction I think a lot of Canadians are not happy with, and we need some change. And maybe January 1st, everyone will make those changes prevalent and push forward to a much better year. Because let's examine a little bit here of the fall economic statement, because it was presented after all, right? Chrystia didn't, she jumped, but the next person in line did deliver it. And as we mentioned there, right, they blew past their $40 billion self-imposed limit and hit $62 billion. What's more is the future budgets are projected to remain in a pretty similar deficit position until at least 2030, right? They're telling the Canadian people to expect around $40 billion deficits for, the next 5-6 years at least. Now, on a positive note, if we can find some light in the darkness here, is Canada does recognize that the foreign investment is going to be an issue moving forward. So they're pledging billions of dollars to encourage outside businesses and businesses here to invest in the country. Most of the new investments mentioned in the statement are incentives meant to encourage investment in Canada and address what's been described as Canada's productivity problem. And then that's dead on, right? When you see the charts about Canada's productivity, it's almost a straight line down. Canadians aren't working as hard as they used to. I think they got used to the free money era, and they're having a hard time, getting back to the office and putting in the type of hours that are required to grow a productive country. And that's so critically important. If every person ultimately worked harder and more productive, Canada's GDP would see a significant increase and foreign investment would flood back in. The government said it'll spend about $17 billion to extend the accelerated investment incentive. This is in regards to temporary tax changes and whatnot that allow companies to write off investments and have an interest in getting a higher return by moving those funds into a place like Canada. Now, when it comes to housing, they've for some reason doubled down on their promise to build 4 million homes, right? And this is after a year where, again, they've seen the reality of how challenging it is to build housing in this country right now. So, quote here, to start, we're building more homes by cutting municipal red tape, using faster, more innovative construction practices, and growing the skilled workforce we need to build nearly 4 million homes. Okay, now they go on here. We're also making it easier to own or rent a home to help Canadians save up for a down payment. We're helping people with their tax-free first home savings account. And of course, as of December 15th, as of this week, they've made the boldest mortgage reforms in decades. Now, the whole first-time savings account, right? It's a joke. Right? There's barely 1,000 people, I think, that have ever even put any money into this nationally. The number is incredibly low. I hope I didn't misquote it, but I remember it being absolutely just uselessly low. Now, the mortgage reforms that she's touched on again, I mean, that's ultimately just allowing people to take on more debt, right? You can now buy up to a $1.5 million house with as little as 5% down. Okay, but then how many people out there who can only afford 5% down can suddenly afford a $1.45 million mortgage? I mean, they have to make something like $380,000 a year. And then if you do that, who wants to be leveraged at 98% loan to value, which it comes out to be after the CMHC insurance is applied to it? Like, it's just, this isn't fiscal responsibleness. You know what I mean? And of course, someone who's never had any finance training is telling people to take on more debt than they ever have. You know my feelings on this. Now, the fall economic statement goes on to outline the other promises they have made and re-mentions that good old Housing Accelerator Fund, which has been around for almost 2 years now. And we know the outcome there. Nothing has been accelerated in housing in Canada. And it kind of,
accelerator
to me, right? Yeah, it illustrates to me sort of the breakdown between the levels of government and how it's been set up in Canada, right? It's fantastic. Sure, of course, at the federal level is trying their best to push programs forward or push them down that build homes. But then they just hit this wall when it gets to the both provincial and the municipal level, right? Super hyper local example in Vancouver, there is something like 280 approved permits for multiplex to build homes, right? These taking down their single family home, putting up 4, 5, 6 units, right? This is trying to help densify and build that missing middle. But apparently there's more than double that are in the backlog, right? People have applied for them and they're just sitting there doing nothing, right? There's definitely no 3331 Ken Sim program in place that's apparently been acted, but it's not being utilized, I guess, because there's over 600 total, apparently, that have been applied for. This came from a developer colleague of ours that just mentioned this to us this week. And so there's ultimately hundreds of builders trying to build thousands of homes in Vancouver, but apparently we're just a few staff short over at the building permit office. And yet we know the government is not afraid to hire, right? 45% of all new jobs over the last 9 years are in the public sector. So why are they not staffing the permit office? I mean, how many more people do they have to hire before they start paying attention to that element, to that office, right? Housing is apparently the number one focus of our government, and yet they won't staff permits to allow the builders to build the homes. It's frustrating at best. And here's the thing. Even if and when those permits do get approved and pushed through and those houses do get built, well, we know the cities are now ratcheting up their building fees, their development fees, their DCCs. And so these homes that are being built, yes, it's great. We're seeing densification and new homes coming to market, but they're not affordable homes. They're just more homes at the current market price.
And nor will they ever be. I mean, Dan, you laid it out really well here. Let's have a look at this just as some high-level things. You talked about being able to go from $1 million to $1.5 million on insured mortgages. So what do you think is going to happen as a result of that? More money printing, right? More inflation's going to come. Higher and higher prices. It's really the only way. They have to continuously inflate. They want their costs covered as well. So the only way to get their costs covered at the municipal level is to allow the end user to take on more debt, which is fiscally irresponsible. This is a pattern, and I hope people can see this. Also, the 280 permits that have been approved, but the over 600 that have been applied for also shows that the city, in my mind, is trying to let these homes out gradually as opposed to all at once, which would cause a price change. If you let all that supply hit the market at one time, if there's 600 in the chamber here, and each one has got 4 units at a minimum, you're looking at 2,400 homes, 2,500 homes that could possibly come to the market here. But if you draw that out over 4 or 5 years, you protect your prices that you're trying to elevate. So I think in many ways, I'm seeing a pattern here that doesn't seem to yet get changed. And another pattern that doesn't seem to change is more and more spending. And so let's get into the BC budget here, because this isn't great either. BC's updated 2024 to 2025 projection was just released and shows a record $9.4 billion deficit, the largest in BC's history. In its 2023 budget, the Eby government initially planned to spend around $79.3 billion in 24 and in 2025, and $80.6 billion in 25 and 26. However, as outlined in Tuesday's fiscal update, these projections have significantly increased, with program spendings now expected to reach $86.5 billion and $86 billion in 2025 and 2026. This is just an extra $12.7 billion, Dan, that's needed here, just to increase in planned spending for those 2 years compared to last year's estimates. Spending has risen across all major areas, including healthcare, education, and social services. While inflation and population growth are often cited as the reason for higher spending, it's important to note that program spending is projected to increase by $1,273 per person in 2024 and 2025 after adjusting for inflation. And after finding out that over the last 5 years that, the federal government has also increased $54,000 of debt per person in Canada, and now we're going to add to it again, it's just I don't get it. As a result, BC is on track to become one of Canada's most indebted provinces by 2029 and 2030, both on a per-person basis and as a share of the economy, surpassing even Ontario and Quebec. This marks a sharp departure from BC's position as a relatively low-debt province just 5 years ago. Furthermore, the growing debt comes with significant interest costs, projected to reach $762 per person in 2024 and 2025. These funds, instead of supporting essential programs like healthcare, education, or tax relief, we're now servicing debt with. Imagine for 1 second here, this budget came out with a whole slew of cuts that showed how we were going to get back on track to be fiscally responsible. That doesn't appear anywhere here. If the government does not address its current spending trajectory, the mounting debt will lead to higher interest burdens, limiting future budget flexibility and leaving British Columbians, you and me, to pay the bill. This just is hugely irresponsible in my mind. I don't understand why it's so impossible for people to talk to Canadians as if they're fiscally responsible themselves, saying, hey, we can afford this as a province, but we can't afford this. Why are we having such a difficult time having that conversation? I don't get it.
Yeah, it's a great question. And ultimately, we hope this episode didn't bum people out too much. I mean, it is the holiday season and we're supposed to be happy here. But of course, there were some pretty monumental movements that essentially came to light this weekend, and we felt they had to be addressed. So that all said, thank you so much for watching. It is the holiday season. It is Christmas this week. So have a wonderful time. Hopefully you're with family and loved ones. I have decided, in lieu of gifts, to ask Santa for a balanced budget in 2025.
He's not coming to you. I'm sorry. Thanks as always. Do have a wonderful week. We are back next Saturday, of course, on the 28th with another special episode. And again, hopefully the government has their time off and they take it to come up with their own resolutions for the new year, and that we will have a much bigger and brighter and more fiscally responsible 2025. Have a wonderful week, and we will see you here next week.